Zillow has officially stopped buying. They are out of the iBuyer game, at least for now, joining OpenDoor, Redfin, and I'm not sure about OfferPad yet. So why are all these iBuyers getting out of the game, and what does that mean for your wholesale business? So a week ago in my video, I said Zillow's not buying, and then I actually got messaged from a Zillow employee because they saw it on my Facebook wall, and they said, "What do you mean? I can assure you we're still buying. I work acquisitions for Zillow." And then this news came out. So guys, I am staying in touch with people locally and all over the country. In fact, I'm on a mastermind right now call, brainstorming with what's going on and what things we can do in our wholesale business to protect our profits and make sure that we keep thriving. For you and me, we're different, right? We're making profit per deal. We're playing a totally different game. We're private companies. We can adjust our offers. We can do things to stay afloat and not only survive, but actually thrive. So guys, the market is shifting, and I've been asked this question so many times now for several years. Josh, I know the market's really good right now and wholesaling's awesome, but can you wholesale when the market shifts and the values are going down? And my answer is the same now as it's been for years. In fact, I actually got into this business in 2009, right after the bubble bursted, and I'm in Phoenix, Arizona, where properties were the highest. We had the highest rise going into the bubble and the biggest collapse coming out of the bubble. And so I got into the business when prices were super low. It's my first full market. Now I'm going into my second market cycle in real estate. And I tell everybody the same thing. No, you can absolutely wholesale when prices are going down. That's how I got started. That's what I was doing. The difference is that it's easier to get the good deals from the sellers because the pressure's on the sellers. I was just on the phone with a lead this morning telling her, look, if you want to write it out, you can, but just be aware this property might be worth less tomorrow and next week and next month. So the pressure's on the sellers, just like people that own stocks. It crashed. Do I get out now and take the loss, or do I hope it rebounds and potentially lose more? That's what homeowners are faced with right now. So use that to your advantage and lock up extra good deals because there's still a market for cash buyers to buy your properties. Well, let's take a look at the business model of Zillow. Zillow is not as much concerned about profitability. I remember an article by OpenDoor's CEO, and this was probably 4 or 5 years ago, when he said, we're not as concerned with profits made per deal. We're more concerned with growth as a company so that we can show that to our shareholders because that's how they make money. They're a publicly traded company. Zillow's the same way. Zillow has not been making money in this wholesale game. They pay too much for properties. They don't profit per deal. Now, wholesalers like me and you and the ones that we go to masterminds with and events with, we're in this wholesale game because we can make huge profits with low or no risk and with low or no money. It's an amazing business model. But when these big iBuyers got into the game as publicly traded companies, they're playing a little bit of a different game. So you have to understand how what's going on affects them as compared to how it affects us. Well, they are paid off of how many people invest in their company. People invest in their company, share prices rise, they make more money, their company is worth more money. How do me and you get paid? We get a really good deal. We sell a really good deal. We get paid. So OpenDoor and Zillow, they weren't as concerned with how much money they made per deal as long as they were showing potential of growth in this new booming, exciting, growing industry of iBuying, right? Well, that was before the stock market tanked over 30% and is still going down. And all of a sudden, if you're playing a game where you're valued based on your share price and share prices are falling and share prices of the overall stock market are falling, that's going to be really scary to investors. And so they need to put a halt on things. So there's two types of stocks, right? There's stocks that pay dividends and then there's growth stocks. It's kind of like houses. There's people that buy for hoping to get appreciation, and there's people that buy because they get good cash flow every month, meaning the cost of them to own the property is less than the rent they receive from the property, so they get money every month. So if you have a cash flowing stock, that's a stock that by owning it, you get a dividend check every month or quarter or whatever interval that stock pays you, and you still own the stock. You get cash flow from it. There's a lot of companies out there like Apple, Zillow, etc., that don't pay dividends. They reinvest that money back into growth, right? So people that buy these stocks are hoping that the value of the stocks goes up and that's how they're going to make their money, as opposed to maybe not being worried about as much about the growth of the share values, but enjoying that dividend check cash flow coming in. So that's the game they're playing. That's why they had to halt it, because all of a sudden their investors are going, I'm not sure that I want to invest in Zillow or OpenDoor when shares are crashing. And how do the shares not crash when the whole stock market is crashing, right? Now look, a lot of the fix and flippers might go away. The people that it's their first and second fix and flip that maybe you've been selling to recently, or maybe they've only been in the business a year or two, they might stop buying. They might freeze, panic, and not be buying. But I promise you, the cash flow buyers are still out there. So you might be selling your properties to less buyers, but you're selling more properties to those buyers. The great thing, these are great buyers to work with. They're professionals. You might be selling to hedge funds. You might be dealing with real estate investors that have been buying rental properties for 20, 30, 40 years. In fact, my mentor in the rental property game, I sold him over 100 houses in the first 2 years that I wholesaled, and I wholesaled all of them to him. He was actually the one that introduced me to wholesale. He was like, hey, if you can get me this property at this price, I'll pay you this much. I didn't know that was called wholesaling, but I was like, well, that sounds good, right? So guess what? I'm going to be selling him a whole bunch more properties again. It's fantastic. I love working with him. The last 2 years, I maybe sell a property to him like one a quarter, and we do a lot of deals, but the prices have just gotten too high. He can't cash flow them. So instead, I'm getting top dollar for these properties to fix and flippers, and maybe it's their first or second flip. And Chris is like, I ain't buying at that price. So now I'll be selling to Chris again, getting a better discount from the seller. And look, if you're looking for a time to build your own portfolio, as prices crash, if they continue to crash, which I personally think they're going to, but my crystal ball's been broken for years now. But if they do crash and they get low, it's the best time ever to build a portfolio. In fact, I've been struggling to find good real estate assets the last couple of years. We've been looking at other markets. We bought properties in Indiana, etc., trying to get good cash flow. Well, if properties drop in Phoenix like crazy right now, we can stock up on these cash flowing assets again. So it's fantastic. So we can sell to cash flow buyers. We can be a cash flow buyer ourselves. And that's part of the long-term game, right? Like the reason I wholesale is so I can buy passive income properties so that eventually I don't have to wholesale anymore. I can just live off of, $50,000 to $100,000, hopefully one day $500,000 a month in pure cash flow after the management company's paid, after vacancies, after maintenance, right? So that's the game. I'll leave you with this. This is from Zillow. So screenshot, if you go to Google right now, click news, Zillow, you're going to see all the headlines. They have stopped buying. All right, in a press release from this morning, after watching rivals OpenDoor and Redfin drop out of the iBuying game, Zillow Group said Monday that it would also suspend home buying amid the coronavirus pandemic. In a statement, co-founder and CEO Rich Barton cited emergency orders in New York, California, Illinois, Louisiana, Ohio, and Nevada, which have instructed non-essential businesses to shutter. In New York, Governor Andrew Cuomo specifically told real estate agents to stop in-person showings and open houses. He went on to quote, given the concerns for public safety and rapid developments by governments that restrict local real estate activities, we determined it was prudent to pause our home buying to preserve our capital, Barton said in the statement. We plan to restore Zillow offers to full operation once health concerns pass and local health orders are lifted. Really? I think we'll see what you're thinking of the overall market after the health concern passes and what's going on in the stock market, because we know you're playing a different game, Zillow. Over the past month, the company slowed its home buying activity. At the end of 2019, Zillow owned 2,707 homes. As of March 19th, it had 1,860 homes. Barton has previously called iBuying a moonshot bet, saying that to ignore it would be an existential threat. In 2019, Zillow's revenue more than doubled to $2.7 billion. Revenue from iBuying was $1.4 billion compared to $52.4 million in 2018. Zillow's losses were $305.4 million, up from $119 million. Last week, Redfin, OpenDoor, and Realogy also suspended home buying. In a letter to shareholders, Redfin CEO Glenn Kelman cited uncertainty in the market and economy overall. We remain as committed as ever to giving home buyers the option of an instant offer, he said, but only when we can know what a fair price for an offer would be. Guys, what you have the opportunity to do right now is incredible. We can adjust our offers, make sure that your contracts are clean, and you have your contingencies in place so that if you can't get the deal sold, you can back out without losing. Now, don't put sellers in bad situations. If they're going to sign a contract with you now and make plans tomorrow that will shatter their entire everything that's going on, if you cancel, don't do that deal. So do what's right, do what's ethical, but keep marketing, keep writing contracts, get them as low as you possibly can, and the great deals you'll still be able to sell. Crush it. Peace, love, and real estate.